said, let's talk a little bit about pre-trading expenses. If you have decided to start a business, you are probably incurring expenses already, which are necessary to prepare for trading. These expenses are called pre-startup or pre-trading expenses, and the majority of them will qualify as trading expenses. You can claim these pre-startup expenses incurred in the 3 years prior to the commencement of the trade. However, some conditions have to be satisfied, so these expenses can qualify for a tax relief. What are these conditions? So this tax relief applies to both sole traders and limited companies. And the deduction is available in respect of pre-trading expenses, which are wholly and exclusively related to your business. You need to keep in mind that if any of these expenses were not entirely related to the trade, you will not be able to reclaim them. So that's a very important condition. What types of expenses can qualify? In general, the vast majority of goods and services you purchase for your business before you start trading will qualify. The most common examples, you can see them on the slide at the moment. These costs would be accountancy fees, legal fees, advertising costs, costs of feasibility studies, preparing business plans, creating and maintaining a website, training or courses related to your business, office equipment costs, cost of renting business premises even. So these are the most typical costs that businesses incur to prepare them for trading. So not many of them realize that they can reclaim these expenses. So it's very important, whatever you start purchasing now, keep the receipts, keep the invoices. Even if you can't reclaim them, there's no harm in keeping the invoice. Your accountant will advise you if this expense is reclaimable or not. How can you claim pre-trading expenses? So any goods or services that you purchased before the trade commenced will be treated as your trading costs, incurred as you were already trading in business. These costs will be offset against your trading profits once you officially register your business and start trading. As a result, they will decrease your tax liability. So they will decrease your profits and they will decrease your tax that you have to pay. These allowable expenses, however, are not available for offset against income other than your trading income. So you can only offset it to any future revenues and income from your trade.